That advantage means that the whole world had to hold dollars. Well, if they don't have to hold dollars to buy oil, they can hold yuan. It shifts the power from the West to the East. And It's kind of like handing off the baton. But that can happen in a heartbeat, especially through the substitution fund. So those other countries, when they talk about that their membership will expand, well, countries typically want to go to strength. And I don't think the U.S. is showing a lot of strength. And I think that we're also forcing other countries whose currencies are pegged to the dollar into positions that they can't support. This is a global issue. So the whole globe is resetting. Now, when you reset a system, then you're going to have countries that are going to step into that new position in a stronger position of power. Who has the most debt? Because all of that debt has to be burned off before they can put a new currency out there. Because as soon as you put those commodities and gold in to back a currency, then that's going to fix the debt wherever that happens to be. And I don't care if you're looking at China or you're looking at Russia or you're looking at the US or anywhere else. These debt levels, not that they're not sustainable, they're not payable, right? And what supports all of these global currencies is the full faith and credit of the respective governments, and they've used that piece up. Mm-hmm. So the way that I can see it and the way that I reconcile it is this isn't just a US issue. This is a global issue. And in order to push the agenda, they need a big enough crisis to get people just to follow along.
No limitations to how low they can push interest rates once we're in a CBDC. So now you get paid, it goes immediately into your bank account that is experiencing negative rates. And that means you aren't getting that paycheck of whatever it is, you're getting that less your negative rates, right? And even if you think you're gonna have cash, because they are saying that they won't take cash completely away because then you're gonna know. But they will put a chip in the cash so that whenever you do go to use it or redeposit it, that it will reflect the negative rates in the banking system. They want you to volunteer. And how convenient was it through the pandemic when, cash is dirty, right? And they actually say in their documentation, one of my very favorite pieces from the IMF was 2015, breaking below the lower zero bound, because they actually tell you how they will get you to volunteer it, and they'll have it, the retailers present it to you. Do you not know a store that says we don't accept cash, or a restaurant? Sure. That's how they did it. Because now all of a sudden cash is dirty. So we vote with our wallets, we vote with our purses. So when there is a store that won't accept cash, whether or not I choose to use it is not relevant, right? If they won't accept it, I don't shop there.
This is my opinion. I cannot prove this. But, the assumption is that the Federal Reserve always wants things to continue on and continue on. But I think they only needed to continue on until they have those CBDCs and everything in place to shift us into a new system.
Also, going back to the IMF, one of the goals that they have is to have all titles to all of your assets held in digital form on your phone. Yeah. Now, have we not been trained toward short-termism? So we are a consumer-driven economy. We're pretty much getting to be, if we're not already, a consumer-driven world. So now you're out and about and you have the equity on your house, sitting on your phone, broken down into itty-bitty bits. You don't have to take out a loan, right? It's on your phone. And you see a boat or a dress or anything else that you want, how easy is it to tap that money that you've got on your phone? And before you know it, you have spent all of your equity. So you have volunteered. If they come at you, you're probably going to protect yourself. If you volunteer it, what are you going to do? And who are you going to blame?
the BIS, the IMF. So these are all unelected officials, central bank heads, treasury secretaries. So the World Bank, the World Economic Forum. So it's the 1% at the top. They wanted to do two things, and they were very clear. If you read the documents when they were putting this whole fiat money system together, they knew that people marry the legal money of the state. So the dollar's never going to go away. No, it'll just be a different dollar, same name. So digital dollar, right? And they also knew that people don't understand inflation, and inflation causes nominal confusion.
They want things to look as normal as possible. And they say this, we know how to do this. And I was alive in 1971. And if I had a $20 bill in my pocket in July and I had a brand new $20 bill in my pocket in September, you know, they were very different $20 bills, but did I know it? No. And so the introduction of cryptocurrencies, which I don't think were an accident, especially when you read the 1996 NSA white paper, government agency white paper on how to create a mint. You know, there are just so many similarities there. There are more of us than there are of central bankers. And we just have to be as independent and self-sufficient so that we don't have to do their bidding. If all of your wealth is held in the system and the banks bail you in and the market crashes, and you can only convert that, whatever you have, into this garbage, then what do you do when that happens? Nothing. You have to do whatever the government tells you to do, or you're in trouble. And, you know, whatever camp I'm in, this is 6,000 years of history. And the reason why it has never lost its value and why I still trust it today, and I never really hear anybody talking about it, is because gold and silver, physical gold and silver, are used in every single sector of the global economy. And that means that of all assets, they have the broadest base of functionality and the broadest base of buyer. Well, you know, you can always make a deposit in, but you can't always pull your wealth out. So gold for me, I mean, I have a whole strategy that I developed just based upon currency life cycles and those repeatable patterns. It's not rocket science, it's actually pretty simple. And if you have this wealth that's outside of the system, since there is such a broad base of buyer, gold and silver in any form is monetary at its base.